On the other hand, lenders get benefited because by taking a little bit extra risk, they get better returns. So basically, it's a win-win situation for both borrowers and lenders, which are bought together by the P2P lending company, and the transactions are conducted through an online platform. Since it's an online platform, which means there would be lower costs for infrastructure, since the P2P lending company need not have big offices or a rented space, and they need not have much staff, and hence P2P lending companies charge lesser fee as compared to the banks. As a result of this, the benefits to lenders and borrowers is that lenders can get higher return on the money they are lending, and borrowers can get lower interest cost as compared to the interest cost which they would have to bear if they would have taken the loan from the bank. Now, what are the other services that are provided by P2P platforms? The first one is that lenders, basically, when they lend money to the borrowers, they are apprehensive whether the money will come back or not, right? So therefore, P2P platforms arrange for the credit rating of the borrower. That is how the borrower in the past has taken money, whether he has returned money or not. So credit rating will basically give confidence to the lender that he can return the money, or will inform the lender that his credit rating is bad and he is likely not to return the money. So P2P platforms will arrange the credit rating of the borrowers to be basically analyzed by the lenders. And in case once the loan is lent, in the end borrower is not able to return the money, then P2P platforms will facilitate the lenders in loan recovery. That is, they will help the lenders to recover loan from the borrowers, right? So these are the two other services which are provided by P2P platforms to the lenders. Now, regarding the regulation of P2P platforms are basically regulated by RBI in India, right? So earlier P2P platforms were not regulated, but then they started to be regulated by RBI. So RBI has certain regulations to regulate P2P platforms, and P2P platforms must abide by those regulations. Otherwise, they will not be allowed to operate in India, right? So please remember that who regulate P2P platforms? It is RBI which regulate P2P platforms. Questions like this are asked in the exam. Now let's discuss about what crowdfunding is. This term is very common these days. We have already seen that how Aam Aadmi Party, that is AAP, collects money to fight elections. Basically, the money is being contributed by a group of people who believes in the ideology and the work done by AAP. This is nothing but an example of crowdfunding, where a group of people come together for a cause and fund that cause. The example we are discussing here is basically a non-profit basis, but crowdfunding can also be done for a profit basis, where you want to launch a certain product which you want to sell in the market to make profit, and you want to collect money by using crowdfunding. Now, what are various types of crowdfunding? The first one is rewards crowdfunding. Rewards crowdfunding में क्या होता है कि सपोज आपने एक प्रोडक्ट का कंसेप्ट बना लिया है, बहुत अच्छा कंसेप्ट है, and you are sure that it will be a big hit in the market. You make some prototypes of that product and then you show it to the people. You convince them that this is a very good product and its cost would be around 10,000, but you convince them that if you book it now by paying just 5,000, it will be given to you in future in just 5,000 rupees, not in 10,000. And you are doing this because you need money to manufacture that product and to sell that on a large scale. So basically, आप क्या कर रहे हैं कि आप एक अपने प्रोडक्ट के कंसेप्ट को प्री बुक करवा के मनी कलेक्ट कर रहे हैं, जो कि आप उस प्रोडक्ट को बनाने और बेचने में यूज करेंगे. दिस इज कॉल्ड रिवॉर्ड्स क्राउड फंडिंग. द सेकंड वन इज इक्विटी क्राउड फंडिंग. दिस इज नथिंग बट यू शेल द शेयर्स ऑफ योर कंपनी, दैट इज यू मेक अदर पीपल पार्टनर्स योर कंपनी टू कलेक्ट सम मनी फ्रॉम देम. This is called equity crowdfunding because the shares are sold to a large number of people. Third one is debt crowdfunding. Debt crowdfunding is nothing but what we discuss in peer-to-peer platforms. That is a perfect example of debt crowdfunding. Litigation funding क्या है कि suppose there are 100 people who have booked their flats with certain builder, but builder does not fulfill this promise and is not giving them the possession of the flats. Now those 100 people wants to fight a case against the builder, and they collect money. They put up a bounty of money and then hire a very good advocate to fight the case against the builder. So this would be a case of litigation crowdfunding, where group of people come together to fight a litigation. Charity-based funding is basically a crowdfunding where group of people come together for a charity, for doing some charity or for some noble cause. Like in case there are floods in some states of India, all of us contribute. So that is an example of charity-based funding. Now let's discuss what angel investors are. These are also very common terms which you would study almost daily in the newspapers. Every startup needs some angel investors or venture capitalists. Let's see what angel investors are. Angel investors are basically individuals who are very rich, who have huge money in their pockets, and they invest their own money in the startups. And when they invest at a very early stage when the concept is new and there is no surety that concept would be a huge success. And when they invest in company at an early stage, what they want in return is they want a share in the company. An example of angel investor could be Mr. Narayan Murthy investing in a new concept by a bunch of IITs, and in turn he demands a share in the company. Another important aspect of angel investor is that they are not involved in the functioning of the company. That once they invest money, they do not bother to see on daily basis what the company in which they have invested is doing exactly. Though they might ask for the feedback or the status or the report on monthly basis, but yes, that would not be done on daily basis. Now let's see what venture capitalists are. Venture capitalists are also very famous among the startups. Here it's wrongly mentioned angel investors. It should be venture capitalist here, right? So here it should be venture capitalists. So venture capitalists are actually professional companies who invest in large amounts in angel investors. So basically they are professional companies and they invest in very large amounts, much larger than the angel investors. And they normally invest in a company when the concept is established. It's almost sure that this would be a success. But the company which is demanding money from venture capitalists needs the money to scale up the business. Also, an important aspect of the way venture capitalists invest money is that they assign members of the board of the company who are involved in day-to-day functioning. That is, venture capitalists will observe on daily basis what the company is doing in which they have invested money. Since this is done because since the stakes are high, they invest in large amounts and hence they need to take care that the steps which are being taken by the company are right, and that can be ensured by appointing some board members on the board of the company in which they have invested money. What is public equity? Public equity is nothing but when a company raises money by selling some shares through IPO. IPO is called initial public offering. In IPO, basically, company sells shares to the general public, which can be individual or companies like mutual funds or pension funds investing in a company through IPO. And IPO is basically only useful when the company has a good established brand name with good business model and it requires capital for further growth. For example, ICICI Lombard has recently come with an IPO, and ICICI Lombard is already established brand name and everybody knows that they are doing good, they are profitable, but they need money to grow further, and that's why they are using the route of IPO to raise money through public. What are private and social cost benefits? Let's take an example. Mr. Verma wants to set up a factory. For this, he wants to analyze whether the project of setting a factory would be beneficial or not. So what Mr. Verma would do is, one is that he would do private cost and benefit analysis. That is, he would analyze what would be his cost and what would be his benefits, which would be called private costs and benefits. But another cost and benefit which most people while setting up a project does not do is called external costs and benefits. Let's discuss what exactly do we mean by private costs and benefits and external costs and benefits. Now, suppose Mr. Verma wants to set up a factory. He has analyzed that he needs to invest 100 crore and the profits would be 120 crores. So the investment of 100 crore would be his private cost. On the other hand, the profits of 120 crores would be his
private benefits. So in this case, since private benefits are 120 crores, which are more than private costs of 100 crores, Mr. Verma would analyze this project would be beneficial. But another aspect which Mr. Verma should analyze are external costs and external benefits. Now suppose that the industry which is being set up by Mr. Verma will cause pollution in the area, which will be very harmful for the animals in the forest nearby. On the other hand, there would be some roads built by Mr. Verma's company in the nearby area, which would make sure or which would provide easy transportation to the local people. So the pollution caused by the industry would be an example of external costs, since it's a negative phenomenon. On the other hand, roads built by Mr. Verma's company, which would make transportation easy for local people, would be an example of external benefit. The point is that anyone, here we are taking a example of Mr. Verma, but anyone who is analyzing such a project, he need not only analyze private cost and benefit, but he or she should also analyze external costs and external benefits. And the decision should be taken by analyzing combination of both. Now in this case, Mr. Verma is making profits of 120 crore by investing 100 crores, then surely his private benefits are more than private cost. But for example, the pollution caused by industry is so harmful that almost all the animals in the nearby forest gets killed. So that's a huge disadvantage, and in this case external costs would be so high that in spite of Mr. Verma making 20 crores of private profit, that is private benefits minus private costs, the project should not be in interest of the society, because that is causing huge harm to the animals. So how do we sum it up is that we describe a concept of social costs and social benefits. Social costs are basically private costs plus external costs, and social benefits are basically private benefits plus external benefit. And a project is viable, our project should be set up only when social benefits are greater than the social costs. Let's do a concept check. Trident Hotel is building a new hotel in Gurgaon. They have bought a very costly land and they are spending huge amount of money on building the hotel. The hotel will create a lot of job opportunities for the people nearby and would result in creating pakka houses for the people who have been displaced. Hotel will generate huge profits each year from this project because there is no hotel nearby and there is huge demand of hotels in this area. What kind of benefits are being discussed in the passage? In the passage it's discussed that the people nearby will get a lot of jobs and they will also get pakka houses, so that is a kind of public benefits or external benefits. Then it's also mentioned that Trident Hotel will make huge profits, which is kind of private benefits. And we have already discussed in the previous slide that social benefits is kind of a sum up of public, that is external benefits plus private benefits. So we are talking about all types of benefits here, public, private and social, and hence the answer